Hello everybody, June turned out to be an extremely busy month. I wasn't expecting so much action, but I was hit left, right, center by rights issue by all the REITs. It seems everybody wants my money, so it turned out to be a very busy month thinking about who to give money to and who to avoid, who to buy and who to sell. First one was of course Capital Land Ascenders who did a placement at 2.727. It wasn't available to the public, but post offering the whole thing just collapsed to 2.6 plus. I was thinking whether or not I should buy something, but I decided against it. Primarily because of the fact that I sold at 2.82 previously, and well, I could buy back cheaper, but I don't think it's cheap enough. Especially if you look at the way they're gonna deploy the proceeds from the placement. $140 million will be used for the acquisition of this guy in Ayer Raja. I'm not the biggest fan of this property. I also don't know much about this stuff in Europe. They don't give any much details, so well, I'm not able to assess the uh, acquisition. And 100 million will go into payment of debt, right? So well, I'm not the biggest fan either. Look at this Ayer Raja property. It's remaining lease only 20 years. I'm not very sure why they want to buy something with just 20 years lease left. What's the upside? I don't think there's a lot of upside. So well, I don't think I'm gonna touch this. MIT is a different story. They did a placement at 2.212, and I talked about it previously in my two videos. I bought at 1.18. I bought, and then I bought more. In fact, I bought so much that this is becoming, I think, one of the biggest, if not the biggest, position in my REITs portfolio. I hold a different point of view from the general public that because I think the general public is just very bearish on US data centers. They think the data center operators are going to go bankrupt, and there's an oversupply, and there's going to be a tenancy issue. I hold a different point of view. I think AI is going to generate a lot of demand for data centers in the US, and I'm quite bullish on this guy. Especially since I'm quite a big fan of the management of this REIT, so I think this is an opportunity to buy, and I bought a lot. I'm not gonna talk too much more though. So if people are interested, you can just look at the previous few videos. AIMS then did equity raising, and actually I bought at 1.17, which is below the rights issue of 1.189. I'm not the biggest fan of this rights issue. I think there's gonna be a short-term drag on the DPU, but I think long-term there's gonna be NAV accretion though. The response, I'm not sure how to interpret it actually. The valid acceptances is just 70%. So a lot of existing unit holders did not take up the REIT, the offers, and the entitlements. But nonetheless, there was still a lot of access applications. So overall, it was a 200% subscribe. So I guess it's okay. But nonetheless, I think the dynamics behind the properties is still very, very positive. That's why I bought even more shares. So I bought in the open market what I would have done in ATM in terms of entitlement and access rights. So overall, I'm quite happy actually. In fact, look at the share price now, it's 1.22 or something. So I guess it's a decent buy. Then Capital Land India also joined in the fund, and they're going to do equity raising rights issue actually at 1.06. Well, I'm not very sure what happened, but the post X rights holding just rallied right to a 1.14. So hey, I sold at 1.13 then, which is quite good, right? Because 1.13 is a post X rights, right? So I still hold the rights and the entitlement to subscribe at 1.06. So I sold pretty much all the things I bought previously in mid-May at 1.03. Not bad, right? I bought 1.03 and I sold at 1.13. So it's like a 7-8% dividend, 7 to 8% total returns. It's just 1 month plus. So I think if SGX gives you an opportunity to take profit quickly, I think I should just take it and take the money and run. And I'm probably gonna subscribe to the rights as well at 1.06. So I bought here, sold here, and I'm gonna buy it back at 1.06. The final one was iREIT, which is gonna do a rights at 40.8 cents, which is pretty much an all-time low actually. I'm not very sure what to do with this one because actually my total returns for this guy is just very bad. I think I'm looking at the total loss of 30 plus 35% maybe, I don't know, something like that on my position. Well, it's not a loss unless I realize it, but nonetheless it's still rather not pleasant to look at the mark to market. Look at the share price performance. It's just been quite bad, right? First of all, after the Ukraine invasion, Euro just took a plummeting, and then subsequently, this is a rights issue, and see everybody just running in fear. I think at this stage, I might be taking out my rights. I'm not very sure if I'll put in more capital for the excess though. So I have to think about it. Anyway, I still have 2 more weeks to think about it, so I'm not sure actually. Finally, ESR Logos, they did a rights issue some month ago already, so it's not in June. But nonetheless, you see, after the issue of the rights at 32.5 cents, whole thing just collapsed again to 31 cents. So I bought more at 31 cents. So this is the third bullet, I think, I fired into ESR REIT at first of all, 33 cents before the rights issue. And then post the rights issue at 32 cents. Now I'm buying at 31 cents. And with this purchase, ESR Logos has become a larger position in my portfolio. Large enough for me to be concerned about what's happening. It's not as big as the MITs, AMs, and Star Hill that I have, but nonetheless, with this purchase, it has become decently large for me to be concerned about it. So these are all the stuff that I did in June. Very very busy month. When I've thought that it's gonna be a very very quiet summer month. I think there's gonna be more volatility ahead in the latter half of this year, especially around September period, where the Fed might be raising rates another time. Sorry, for the second time. I think the FOMC in July is given that they're gonna rate they're gonna raise rates by 25 pips. I think in September they're gonna raise again, and I think the market is not prepared for that. So I think a lot of volatility and a lot of opportunities will present itself in the September October period, and want to be ready for that.